Hey everybody, welcome back to Ryan Makes Sense. Today we're going to be looking at pets. This is Petmed Express, ticker symbol PETS. We're going to see if institutions and hedge funds are buying this. By the time this video comes out, it will already be after earnings, so this is an earnings preview. I did a Petmed Express video end of July that essentially called the price action we're seeing, where we did break into a bullish move and now we're into the fours. We're going to see if the company has improved or made any announcements since then. We'll also see if institutional buying is decreasing or increasing. We'll also do some advanced charting on Think or Swim for some technical, um, get some technical supports and resistances. As you can see, it looks like we are, you can't see it, so let me shrink my head first. So it looks like we are turning the proverbial corner right down here. You can see it has definitely hitched um, a move for a potential reversal. I do have a $2.38 alert if the stock does go below that. Um, so we'll just be keeping an eye on that. So we'll come back to Thinkorswim. Let's go ahead and run through our stock price projection calculation as well. A lot of things going on here, so let's just jump in. If you know me, you know I like to look at the bigger picture. Beautiful consolidation, and it is potentially getting ready to curl up. We can see our strength was with the bears. However, it is reversing, potentially moving to the bulls. There again, today is November 2nd. By the time this video comes out, it'll be November, mid-November. But again, seeing a reversal of the money flows going up. Our MACD momentum is going up as well. Our relative momentum indicator is still at the bottom of the ocean. However, we do see optimistic signals from our strength, MACD, and money flow. Again, we'll double check our money flow, see if institutions and hedge funds are actually buying. Okay, just going and taking a peek here. They are not profitable. Quick ratio is okay. The debt situation is fantastic. Almost no debt. Gross margins 24%, not bad. Again, they're barely not profitable. Not even, they're less than 1% profitable. So hopefully that is a positive trend. Shares outstanding 21 million. So this is a very low float stock and can be manipulated up or down pretty quickly and pretty easily. So again, for example, this is a $4.20 stock, 420. There's only 20 million shares outstanding. So if someone has $80 million, they could scoop or swoop in here to manipulate the stock going up or down. I know $80 million is a lot of money to probably us or people watching, but for the bigger hedge funds and those who can really move a stock, this is something that big money could easily influence. Looking at 2024 trailing 12 months, we are at 270 million, which is good. 2023 is 256 million. So overall, we're seeing the trailing 12 months being positive and a potential, again, turning the corner from 2023. You can see 2021, 2022, 2023 just going downhill like this, but now we've got a reversal, potentially, hopefully going like this. So that's what we got there. Let's go ahead and bust out our handy dandy calculator. We have income of negative 2,570,000. And they do 270,770,000 in sales. Good for them. And this calculator was made for stocks like this, where it's essentially a micro cap. So before we move on, just going to double check a couple things. Q1 2024, they did 66 million this year. Q1 2023, they did 62 million. However, they did spend a little bit extra. So our gross profit year over year was actually less, although revenues were higher. So that's just something interesting to note. Also, revenue Q2 2024, they brought in 67 million. this year. Last year they brought in 78 million. However, they did spend 5.2 million more last year. Overall gross profit is down. So year over year gross profit's down. Meanwhile, revenues are up. Um, Water break. I don't I don't I don't have a particular hard thought about that just because I mean this company's they're making less than 400 million a year. They're making less than 100 million a quarter. They're obviously still working some things out. Looking down here, gross margins, you can see they're pretty steady between 27 and 23. So maybe like 24 point something as the average. If we're looking at 23.91, 27.28. So not bad. Let's go to our balance sheet. Let's look what they got going on with the cash. Cash is at a low. We haven't seen cash this low since pre-2022. Hopefully they're putting it to good use. So cash they have 445,980,000. Debt, yep, 880,000. That is nothing. All right. Let's just take some. Let's observe really quick. Observe. Assets 152 million, liabilities 59 million. Assets dwarf liabilities about 2.75 to 1. So for every one liability they have 2.75 in assets, which is good. Um, just peeking here. So assets decreased about 23 million, while liabilities decreased about 14 million from Q1 to Q2 of 2024. You can see assets from Q4 2023 to Q1 2024. Assets increased about 1.45. Or I'm sorry, 1.7. I don't know. They increased right here, you can see, but liabilities decreased. So that was good. And now this last quarter, Q2, again, they're having Q3 and next Wednesday. So these numbers, it'll be good to reflect and see because this will be fresh data. Um, it looks like they're trying to find their sweet spot in terms of their income producing assets or assets that generate cash flow and liabilities that are useless. So uh, overall, I'm liking that. And I was looking at the wrong thing. I'm sorry. I should have been looking here and here. So I think I was. I just got confused here. So yeah, overall, they're just trying to figure out their assets, liabilities there, which is fine. We can see the CEO and president about $100,000 worth at 726. Jeez. Okay. Well, I mean, there's no. We just checked this for red flags. No red flags really. I mean, so far so good. Let's continue on. And they've got 21,150,000 shares standing. This is a $14 stock according to my calculations. Now, if this is a $14 stock according to my calculations and the stock is at $4, institutions and hedge funds would be buying presumptually, right? So, the old data shows that institutions own 58.2%. If what I'm seeing is true, institutions probably own much more than that. Drum roll. Institutions own 65.5%. That is an increase of about 7.3% overall. That's pretty good. And again, we see Nina Capital Holdings, they did purchase 2 million shares. That's pretty good. Uh, last October, not last October, October last month. So about a month ago at, gosh, what did they buy it at? We probably got it down here. So it looks like they increased their position So I don't know if you guys follow Fintel, but it's been acting weird. So Nina, they increased their position, so they should have a. It should show their previous shares and percentage, etc. But looking at other data, we can see BlackRock sold 68%. Um, Renaissance Technologies added 64%, and Vanguard decreased 20%. So the big boys decreased earlier this year. That was February. Nina purchased last month. Well, they added to their position. Overall, we can see institutions and hedge funds are, it's not really reversing at the moment. Again, a lot of this is riding on earnings coming up. So, with that said, um, let me explain some lines here to you guys, and I'll just blow it up here. So these green arcs are when you want to buy and buy. So you want to buy within here, buy within here. That would have been our sell. So I mean, buying at 15, selling at 56, buying at 9 cents, and then riding this through our next arc. So that's what these green arcs are for. Just looking at the buy, the dip buy. So if you would have bought here and sold before purchasing here again, that would have been the medulla oblongata. And then buying here again, the low, the dip, which is $15, and then getting out. If you would have bought at $15, you are down substantially. So now just looking at some supports and resistances to watch out for as we continue to move forward. So we have all-time low at 9 cents. Right there. And we have good support at 59 cents. Then we have really good support at $1.69. Right there. And then probably right there. So if you are waiting for a dip, I would say wait for maybe 280s. However, we do know momentum is on the side with the bulls, and we do know that due to this right here. We have the monthly momentum on the upside. Our strength is going up from the ashes, and the money flow is increasing, although the big money that's impacting from earlier this year. Other big positions, I mean, we can see some red selling all out. I'm not seeing some huge additions, but a lot of people adding and decreasing to their positions. You'll see those in the whites, the white columns. Cubist Systematic added 196,000 shares. That's pretty good in September. So I think momentum is with the bulls. However, things can turn on a dime. If you've been in the stock market, you know. In terms of areas to watch for it's going to hit its head, we do see some. This is a good area of conflict right here. This is exactly where the stock is right now. Right there. $6.46 is going to be test number one. And we do have some supports over here. That's our next test, and then likely there. So we've got 646, $9, and 1140. So those are the levels to really watch. You can see they used to offer a dividend, these green logos down here. They finally got rid of it, which is good because they need to put that money towards the business to grow it and improve it. So I really like this company. In terms of, I actually did buy some. Whenever I buy stocks that I review, I post about it on my YouTube community page, but I did buy some. I'm up like 15%. Um, I probably am gonna sell before the earnings, not because I'm nervous of their earnings, but because I'm just not 100% confident in this. Um, right here. So we can see Q1 and Q2 this year, they're not doing as good as they did last year. So that's beige flag number one. Beige flag number two, their overall gross profits are also not as high as they were last year as well. So I think the company's obviously moving in the right direction. They've got rid of that dividend. They're able to put more money into themselves. Gross profit is an issue. We did not look at the net income. The net income is a lot. Net income is actually surprisingly gorgeous. Q1 2024 negative 5.02, Q1 2023 negative 5.1. So an increase of 0.08 to the positive side. And then Q2 2024 positive 3.57 compared to negative 0.89 last year. So we're seeing some efficiencies on the net income. The EPS, we're gonna look at the recurring. Q1 they were negative 0.25. Last year they were negative 0.25. This Q2 2024 they were positive 0.18 compared to a negative 0.03 last year. So again, these efficiencies are really kind of signaling a turnaround for the company. And the turnaround for the company is also being signified in the charts, in my opinion. So the only reason I do want to sell my position is because I want to add to Microsoft and Tesla. This is a fantastic high risk, high reward company. Um, and gosh, I would just like to take my 15% profit and roll it into something I'm going to hold on to for years. Whereas this could really just take a nice dip, and I would love to get in this again. Also, just pointing this out, I don't know if you guys caught this. I just caught this. This is a recommend of 4, which is almost the worst. 5 is the worst. But you have to use discretion and you really have to think, I guess, for yourself, basically. Earnings per share. This is looking like it's going to turn a corner. So we're at negative 0.37 here. And let me show you how that's calculated. EPS right here, if we take, it's not our net income, it's the EPS recurring. Take the last 4 quarters. I mean, this would be almost positive. And let me just open the calculator because I think, was that showing 2023 or 2024? So it's showing 2024 trailing 12 months. Okay, so we have 0.03 plus negative 0.07 plus negative 0.25 plus 0.18. So we should be closer to negative 0.11. So this is turning a corner much better than we thought. And if you're saying, dude, that doesn't match up, also look here, the sales are showing 281 million for 2024. Up here, it's showing 270 million. I think it's a Finviz thing that's off because the sales down here, the sales here, trailing 12 months, should be also reflected here. Let's just look here at our revenue and add it up and see which one is correct. 71 million plus 65.32 plus 66.5 plus 67. So we're at 277. So yeah, right here, this is showing trailing 12 months. This is not showing trailing 12 months. This is not showing trailing 12 months. So there's a slight discrepancy going on. I wonder where it's getting the 281. Let's just take a peek. So 270, we're down by 11 million there. I mean, is it looking at I don't know. I'm not sure. 78 and 71's 149.24 plus 131. So it's around, yeah, it's going to be close to this. So Finviz is a little off, but this is off in my opinion, and this should be reflecting negative 0.11. And this should be 270, unless I don't know where Finviz is getting this, so we're not going to pay attention to it. The 2.115 is matching here. Sometimes it doesn't. So I think it's a Finviz thing. Maybe they're doing updates this weekend. Who knows? But that is really all I've got for you guys. Yeah, I mean, not the worst stock to get into. I mean, it's almost profitable. Gross margins are not bad. Very under the radar stock. Very under the radar, very low float. This thing could turn fast to the upside or the downside. Um, Institutions are buying. Insiders were buying. Well, they bought it at a much cheaper or a much expensive price if you're looking at the CEO. So overall, this is neutral. I might take profits next week. If I do end up taking profits, you'll see it in my YouTube communities page where I post my buys and sells. Just take profits before earnings, or I could just let it roll. I only own like less than 5 shares, so it's not even any money. It's more so of showing my portfolio growth for the year of 2024. Because it is, if you're not aware, it's $25 a week, and trying to take some gains going into the end of the year would be good. So anyway, overall good stock. Long term, the stock is turning around, no doubt about it. If you made it this far, consider subscribing. I really appreciate you for watching. Take care. See you soon.